For decades, the value of ultra-luxury real estate in America was a calculation of physical scale, the acreage of the lot, the size of the pool, and the total square footage of the structure. In tech hubs like Austin and Silicon Valley, that calculation is shifting. The traditional rules of land-based valuation are being replaced by a new standard centered on technological capability. A 10,000-square-foot mansion now faces a much narrower pool of high-net-worth buyers if the building lacks the internal infrastructure to manage itself. This chart shows the resulting market divide. While historical valuations for standard luxury homes remain steady, properties featuring integrated artificial intelligence are commanding a premium of 200%. Real estate investors identify this as the tech multiplier effect. By treating the home as an autonomous system, developers have turned high-end residential property into a high-growth tech asset. The current American real estate boom indicates that the physical land is no longer the primary driver of value, the software is. Take a look at the exterior of a modern smart estate. It functions as a self-contained unit, physically detached from the public power grid. Off-grid independence has become the foundational requirement for these properties. The goal is to ensure the estate remains operational regardless of the status of city infrastructure. This diagram shows the first stage of independence. The roof uses invisible solar tiles, converting sunlight into energy. That energy flows into a hidden, high-capacity battery wall system, providing enough stored power to run the entire property autonomously. This autonomous power supply also drives the security perimeter, where traditional locks have been replaced by facial recognition sensors at every entry point to manage access without human intervention. Combining utility independence with automated security transforms the property into a self-governing asset. For an investor, these features justify a valuation that sits far above the local market average. Inside the home, the focus shifts to creating an environment that thinks and reacts in real time. The property operates through internal autonomy, meaning the house manages its climate, adjusts its own lighting, without waiting for a command. The central AI monitors the sun's trajectory across the sky from sunrise to sunset. Based on that data, the windows darken to manage internal thermal loads, maintaining a steady temperature while reducing the strain on the cooling system. Simultaneously, the climate control system uses biometric sensors to monitor people within the house. The system then adjusts the air temperature in specific zones to match the real-time body heat of the occupants in that room. This level of engineering goes well beyond standard smart home gadgets. It is a deeply integrated network of sensors and processors working to remove the friction of daily life. For the high-net-worth buyer, this total reduction in property management overhead is the ultimate luxury. It provides the mathematical logic behind the willingness to pay double the price of a traditional mansion. We are seeing a permanent shift in how luxury real estate is defined in America. This comparison shows the new reality. While the land and physical structure still hold value, the software and autonomous intelligence now represent the dominant share of a property's total worth. For the modern investor, the premium real estate market is now a digital ecosystem where technological capability is the primary asset. In this new era of real estate, the land is simply the hardware. The true value is in the AI.